Hello, everyone. Thank you for joining us today for our virtual discussion around what the modern investor really wants. My name is Jeremy Johnson, Head of Technology at Flyer. And in this session, the real estate experts at AppFolio Investment Management surveyed over 100 real estate investors to gain insights into the relationships they have with their management companies, their goals, and their concerns about the industry. They have compiled those findings into a comprehensive report they are pleased to share with the industry. With that, I'd like to introduce Mike Sebastian, who is the industry principal at AppFolio Investment Management. Mike, I'll pass it over to you to kick this off.
Thanks, Jeremy. Hi, everyone, and welcome to our discussion today titled Research Results, What the Modern Investor Really Wants, presented by AppFolio Investment Management. I'm Mike Sebastian, and I'm the industry principal at AppFolio Investment Management. I've been in real estate technology for 15 years, and I'll be leading this discussion today as we dive into the results my team recently conducted on real estate investor sentiment. After I've shared out today's findings, I'll hold a Q&A with the audience to address any questions you might have. If you're interested in submitting questions for the Q&A, you can do so at any time throughout the discussion. On the bottom of your screen is the Zoom control panel. We want this session to be interactive, so please submit any questions or comments you have in the questions pane as shown here highlighted. To gain insight into the relationships that real estate investors have with their investment management companies, their goals, and their concerns about the industry, our team at AppFolio Investment Management surveyed 102 individual real estate investors in the United States. We conducted a similar survey in 2019, and after seeing the dramatic changes the industry has experienced since then, we wanted to survey the real estate investing market once again to get an understanding of how these industry impacts affected investor sentiment and concerns. I'm excited to present the results from this recent survey to you today. We'll be breaking up the findings into 5 categories: a profile of today's real estate investor, investor sentiment and concerns, investor knowledge and tools, and how investors view their investment management companies. All right, so before we begin, I wanted to share our survey methodology. This survey was given to 102 real estate investor participants, was administered over the internet, and took an average of 15 minutes to complete. Respondents filled out their observations and opinions between March 23rd and April 19th of 2021. The sample was diverse and included individuals with different backgrounds, levels of expertise in the industry, investment amount, age, and region. For deeper insights, I will include additional views split by investor age ranges, which will be 18 to 44 and 45 and over. The investor net worth, which will be greater than 5 million and 5 million plus. In 2019, we surveyed 101 real estate investors, pretty close to the last one, with the same criteria, and a majority of the same questions were asked. Certain questions results will reference and compare to this 2019 data to demonstrate evolutions in investor sentiment over this time. All survey participants met the following qualifications. Some part of their portfolio was invested in real estate. They had a personal income of $200,000 or more, or a household income of $300,000 or more, so they are accredited, have a net worth of $1 million or more, have at least $25,000 invested in real estate, and they receive a K-1 or a 1099 dividend tax form from the real estate investment management firm. Now let's begin with our first section, which gives a general overview of the makings of today's real estate investor. We were curious to see what percentage of these investors' portfolios included real estate. Real estate investors have 26% of their portfolios invested in real estate. This is a 3% increase compared to 2019, while stock allocations dropped about 6%. This data shows that investors followed through with their 2019 plans to increase their real estate allocations. Older investors tended to have a larger allocation in the stock market, while younger investors are more open to alternative types of investing, such as venture capital, cryptocurrency, and hedge funds. Overall, real estate investors favor real estate investments over all other types surveyed, aside from stocks. Younger investors are more likely to branch out and invest in non-traditional products. This means that the next generation of investors are educating themselves and looking for new ways to grow their money. These investors will benefit from real estate investment managers that are versed in what they do and offer more, more innovative ways to educate and track their investments. Specifically focusing on the real estate section of their portfolio, when we asked investors how much money they invest across all real estate investments, the total amount of capital invested in real estate investments averaged $835,000 for all respondents. Breaking down this data further, respondents with a net worth over 5 million have almost twice the amount of capital invested in a real estate as those with a lower net worth. Splitting the results by age, the 18 to 44 group's average total capital investment is 20% lower than the 45 plus group. This data indicates that these newer investor profiles are less mature than the 45 plus group. And as a result, portfolios in this 18 to 44 group are more likely to be contributed to for longer. In other words, we should expect that this group's contributions to grow, and you can continue to look to this group reliably for fundraisers in the future. Real estate investment managers should be looking for new ways to capture investment contributions and new investor money coming into this sector. So we asked which of the following is the best description of your overall investment strategy. The respondents' investment strategies lean heavily to growth as they had in 2019. In 2021, investor appetite for aggressive growth strategies dropped by only 7%. Showing that investors continue to prefer taking on risks for future returns. On the other hand, there was an 84% increase in those that see themselves as bargain investors. They are looking for investment opportunities that are undervalued so they can get a deal. This data indicates that a portion of investors may perceive that the market may be overvalued and that bargains are becoming more scarce. Real estate investment managers can use this information to appeal to all groups by seeking investment avenues offering growth and value. We asked, when investing in real estate, what are your preferred property types? So when it came to physical property investment, single-family residential was the most popular choice. Close to half of investors, 45%, are invested in multifamily residential properties, followed by land, office, industrial, retail, self-storage, hospitality, and others. The 18 to 44 age group tended to invest more heavily in residential properties than other property types. This could be because the amount of money required to invest in other types of properties, the complexity involved with getting into those, getting info and owning these properties, and the general knowledge of the real estate investment manager. So we asked, which of the following strategies do you prefer when investing in real estate? Investors favor core, core plus, and value add. Overall, investors prefer to put their money into core, core plus group, indicating that investors prefer to put their money into assets that are already performing well. We asked, what is your preferred investment hold period? Respondents report preferring to hold their investments for 3 to 5 years, closely followed by 10 or more years with an average of 4.8. The 45 plus group tended to hold for longer than the 18 to 44 group. The difference in holding time between the two groups indicates that the 18 to 44 group may do more self-directed investing and might be more flexible in their investment choices. When asked which metrics were most important to them when evaluating potential investments, investors are most concerned with their return on investment, followed by the IRR, or internal rate of return, cap rates, and cash on cash return. Return on investment was the most important for most net worth groups, therefore making a return on investment the most important metric to investors. Now let's take a look at investor sentiment and concerns. We asked, do you plan to increase, decrease, or maintain your real estate investments in the next few years? Well, 45% of investors plan to increase their real estate holdings in the next 3 years. 12% more investors plan to increase their real estate holdings in 2021 than compared to 2019. Only 6% of investors reported that they plan to decrease their allocation to real estate, indicating that investors look at their real estate investments favorably and plan to increase allocations when they see opportunities. This information denotes that investors are generally open to investing more and would be more likely to do so with the appropriate information from the real estate investment manager. When looking at the next 6 to 12 months, how do you feel about the following issues? So you can see the issues ranked on this slide here. Investors are more upbeat about their investment performance and the real estate market, and least about the political landscape. The 18 to 44 group, those with the lower net worth, so that would be less than 5 million as we measured it, and smaller investors less than 1 million, are more optimistic than their counterparts. The positive outlook on the real estate market, domestic economy, and investment performance are consistent with the 2019 survey data. However, in 2019, investors were more pessimistic about changes in real estate laws and regulations and their personal information and data security. We are now seeing investors becoming more optimistic about these issues. So we also asked, in your opinion, what is the major opportunity for real estate investors today? Respondents shared that they are aware of urban flight, the need for warehouses, unwanted retail space, and foreclosures, and are looking for ways to capitalize on these trend changes. So we asked, what do you think is the biggest challenge when investing in real estate today? The major challenges seen by respondents include regulations and equity requirements, economic uncertainty, finding responsible long-term tenants in good properties, and the changes COVID has brought about. The respondents show the most real estate investors are active and doing their best to stay up to date with the market and trends. What changes are you making to your real estate investment strategy in response to COVID in the upcoming year? Well, the overwhelming response was that investors planned to make no changes, and some investors invested more in real estate. Investors see changes COVID has brought about as transitory and are not changing their plans. We also asked investors a few questions about their knowledge of some trends and how they use certain technology tools. Investors aged 18 to 44 reported being very knowledgeable about blockchain technology, and a significant percent would be interested in investing in blockchain-based real estate investments. The 45 plus age group reported less interest in these types of investments. This information reiterates the point that the 18 to 44 group of investors is more open to alternative types of investing and willing to self-educate with the help of a knowledgeable investment manager. All right. We asked, how knowledgeable are you about ESG, investment criteria, and how important is ESG when evaluating investment opportunities? This question elicited a similar response from both age groups as the question about blockchain technology. Again, the 18 to 44 age group is concerned with how their money impacts the world, being able to convey to your clients how their investments help others, and the world will be seen as favorable with this age group of investors. How knowledgeable are you about opportunity zone investments? Well, almost 3/4 of investors are knowledgeable about opportunity zones. Younger investors are more knowledgeable, 60%, compared to older investors that came in at about 17%. What software programs do you use to help manage your real estate investments? Investors aged 18 to 44 are more likely to use tools provided by investment managers, spreadsheets, and other modes to manage their investments. In contrast, more than half of the 45 plus group does not use software to manage their investments. In 2019, the majority, which was 39.6% of investors, did not use software to manage their investments, and 29.7% reported using an investor portal. The new generation of investors entering the market expect to have all the information possible at their fingertips. What other financial applications do you use? The respondents, as you can see here, Fidelity, Charles Schwab, E-Trade were the most popular financial applications among all investors. Interestingly, the 45 plus group reported using non-mainstream financial applications the most, and the 18 to 44 group preferred E-Trade and Fidelity. It would be helpful for investment managers to study the experience being provided on these platforms and understand how they can replicate it with their investor relations team. Where do you get information about news and trends in the real estate industry? General interest media is the primary way investors stay up to date with trends. Investment managers are also viewed as a trusted source, and one-on-one communication is critical to investors. Younger investors rely on a variety of digital sources as well for news and information. When compared to the data collected in 2019, these findings remain consistent. I know it's a lot of numbers to look at, so I'm trying to leave the slide up so you can take a look at it. So how investors view investment management companies. So we're getting to another section here. Finally, we're curious to see how they felt about service and their experience their investment management companies were providing. Real estate. So we asked, how many investment companies do you invest with? And the investors tended to invest with an average of 4 different companies. The 45 plus group tended to invest with fewer companies than the 18 to 44 group. The tendency to invest with more companies is likely due to increase their exposure to different types of investing and investing strategies provided by a variety of companies. Investment managers should keep this data point in mind when engaging with investors and understand that they need to be providing an investor relations experience that is competitive. How likely are you to recommend your current real estate investment management company to a friend or colleague? We wanted to use this question to measure the net promoter score, or also known as NPS, of investors in the market. NPS is a widely used market research metric that gives us insight into how likely a respondent would be willing to refer a service or a company to a colleague. Investors aged 18 to 44 and investors with a lower net worth are more likely to recommend their real estate investment manager to a friend or colleague. This is likely because this age group has access to people that can afford to, but have not yet allocated a significant part of their portfolio to real estate investing, making this group of investors the best for really for the best for word of mouth or that kind of marketing. If you would recommend your real estate investment management company, please explain your reasoning. So respondents reported that they would recommend their current real estate investment manager because of their relationship with them, their performance, and their outstanding knowledge and guidance. Do you trust your real estate investment manager to make decisions on your behalf? How would you rate the level of information transparency in your investment management company? Sentiment on trust and transparency of investment managers did not skew far from the midline average. However, the 18 to 44 age group reported being more trusting and satisfied with transparency than the 45 plus and those with higher net worth. The discrepancy appears to be related to transparency. The survey shows that the 18 to 44 group actively seeks out information when they want it, whereas the 45 plus group does not. The difference in investor behavior may be causing the subtle differences seen here. We asked, how do you view your investment manager's response to market changes or uncertainties? Overall, investors are satisfied with how their managers respond to uncertainty. This is probably why investors do not plan to and have not reduced their real estate holdings, even in the light of the pandemic. How do you typically interact with your real estate investment company? In addition to the data I'm showing here, when you split this data by age, the 18 to 44 age group reported taking regularly scheduled meetings and reviewing all the information provided by their investment managers than the 45 plus age group. On the flip side, the 45 plus age group reported preferring to see only a short report related to their portfolio performance. The data is consistent with the information gathered in 2019 and really harkens back to differences in how different age groups manage their investments. How often do you contact your real estate investment manager? Well, investors average 66 interactions with their real estate investment managers per year. The 18 to 44 age group reported contacting their real estate investment managers 585% more times a year than the 45 plus group. So think about that for a minute. Again, this information indicates that the 18 to 44 group actively seeks a lot of information about their investments. This group wants information now. If you have 100 investors, just to put this into perspective, if you have 100 investors, this is potentially fielding at least 3 interactions per day. As a real estate investment manager, you can make your job easier by offering information about products and recommendations online for clients to review at their leisure through an investor portal. What is your preferred method of communication with your real estate investment management company? So phone calls and email are the preferred methods of communication for investors. The 18 to 44 group was evenly split between traditional and digital forms of communication, while the 45 plus group tended to prefer traditional forms of communication. All of the forms of communication, or I should say all the forms, email was the most popular for both groups, as it had been in 2019. This shows that investors want information and prefer the consumption of it to not be too time consuming or on their own time. Notably, interest in paper-based forms of communication dropped from 29.7% to 17% between 2019 and 2021. What devices do you use to access information from your real estate investment manager? Computers are obviously the most common device for investors to access information about their investments. A sizable portion of the 18 to 44 group will also access information over mobile devices. While it's easier to read large, complicated documents on large screen, real estate investment managers should work to make their websites and portals mobile friendly to serve a new investor group. How valuable would each of these technologies be to you as an investor? Well, investors are open to leveraging technology for their real estate investments and view all proposed technologies as useful. As we know from previous questions, most investors see themselves as having some knowledge of the market, and the 18 to 44 age group reported much more interest in staying up to date with industry trends. The data makes it apparent that that 18 to 44 group desires tools that will make it easier for them to get the information they're looking for. How does your real estate investment management company offer an investor portal? Or does your real estate investment offer an investor portal? If so, how often do you use it? Well, most real estate investors use an investment management company that has a portal of sorts. Of the people that invest with companies that offer portals, 74% report visiting that portal at least once a month. Investors in the age bracket of 18 to 44 seek out firms with investor portals. What are the primary reasons you use your investor portal? Well, investors primarily use the portal to access updates about individual assets, view performance metrics, and download tax documents. The reported data has shifted slightly from 2019. In 2019, investors were doing much less with their portals than they are today. The majority were using their portals to view personal portfolio information, whereas today they view updates, they access tax documents. This shift indicates that real estate investment managers are beginning to offer more functionality through portals to save time and give clients the experience they expect. All right. So before we get to questions, I wanted to highlight an important way you can meet and exceed the needs and expectations of your investors. As we've just seen from this research, investors now expect their investment managers to provide an on-demand and technology-driven experience. The best way you can do this is by investing in purpose-built investment management software like AppFolio Investment Management. Our team of experts will work with you to streamline your process and effectively communicate with investors, all within a software that was built specifically for you. If you'd like to get in touch with us or receive a copy of this investor report, a member of our team will reach out following this discussion, or you can learn more about us at appfolioinvestmentmanagement.com. I'd now like to open up the session to questions from the audience. And I hope you got something out of the data that we gathered and enjoyed this presentation. So let's open it up to questions.
All righty. Excuse me. So the first one I saw was what type of info should asset managers provide in their portals, investor portals?
Yeah, thanks, Jeremy. So we had a question about that earlier on, which is what are investors doing? And based on our research and my own anecdotal experience in working with just hundreds of clients every year, there's a couple things that are really important. One is that you want to have, as you can see from the research, a tool that will work on a mobile device. Every year, the amount of investors that look at their phone to get into the portal is increasing dramatically. So having said that, what kind of information do you need to display in there? Well, it's certainly going to be tax documents. That's a huge reason all investors of all age groups get in there into their portals to get their tax documents. And there's a lot of nuances to that and how you get that in there. But other information include just looking at their portfolio. So being able to get in there and look at their cap tables, look at the performance of the assets, so their IRRs, their equity multiples, other metrics that you can publish there. Getting access to their distribution history, because a lot of questions come up sometimes that you get and you have to feel, well, hey, did you send out my check? What was that last distribution you sent me? Things like that. They can just get in there and look at that stuff themselves. So it's transactional data. It's data about the asset itself. So it could be narrative about the property, what's going on, updates about projects. So there's so many different types of ways that you can interact with your clients, with your investors, that you can do through a portal and make it very streamlined so that you're spending less time on that and more optimizing your portfolio, looking for doing research, looking for new acquisitions, and so on and so forth. So hopefully that is helpful.
Okay. I got one from Kevin Smith, who says, it was interesting that you spoke about the younger investors wanting more education versus the older ones. Could you explain more about that?
More education. So there's a couple things. The younger investors, I think, are so what we typically see is and I'll just kind of put this in a couple different ways. The older investors have a tendency to just want to get a paper report, and they'll look through that report, and oftentimes that report has the same things that you would have in the portal, but they only get like 4 of them a year, 1 a quarter, generally speaking. Of course, you could do it more often than that, and some companies do. But they tend to just rely on that and then call their investment manager and ask questions about it. Whereas the younger investors are more digitally driven. They're going to get on their phone and they want to look up the question right away and see what's going on and compare it to maybe other investments that they're considering. And they want to get that information in more real time. And so they require more information more frequently. And we see this as a great tool to attract and retain investors, and to also give them what they're looking for, because the tools are there, and the investors and the younger investors are going to go where they can get those tools. So hopefully that's helpful.
Okay. Eric Wright said he was surprised to learn that the younger investors were more knowledgeable about opportunity zones. What was the level of education around opportunity zones?
So I think we asked the question generically just to understand if they were aware of it and okay, what age ranges were aware of it. But I can tell you from my experience that it is, and opportunity zones are popping up. The opportunity zone funds and investments are popping up all over the place now. I think the level of awareness is increasing about them. If we go back to 2019, part of the problem with opportunity zones is that the regulations were really not well defined. And so people were hesitating to invest in them just because there was too much risk. You just didn't know as much as they should have. I think that regulation is becoming more and more clarified each year. And so you're starting to see more investment into those types of funds.
Okay. Another question was, do you have a geographic breakdown of the investors surveyed, or can you speak to that generally?
Geographic. Yeah, I don't think we parsed it out by geography
Okay.
per se. But one of the things I would just relate to you is that where the so you can break geography down into sort of two things: where the investors live, which the investors that we surveyed are only in the U.S. But you could also break that question down by, well, where do investors want to invest? And that seems to be more in, like we did ask the question about the education. And so investors of all age groups are aware of urban flight and moving out of gateway cities into secondary cities and suburbs and things like this. And so we are seeing that awareness is leading to opportunities in those types of cities. So think like Boise, right? Houston, or I'm sorry, Austin is a big one. There's all those secondary cities that are not the main hubs like New York, LA, San Francisco.
You spoke about investors flocking to residential as well. Could you go into a little bit more detail on that versus multifamily?
Well, sure. So you can break out residential into a couple different categories. You have multifamily apartments, you have single family homes, you've got co-living spaces. Prior to the pandemic, co-living was on the increase. I expect that trend to return. You have apartment buildings they're very valuable right now because there's just not enough space for people to, there's a higher demand than there is a supply at the moment, and there's pipeline problems with construction. So those types of investments are very popular. And especially with the migration patterns we see out of the bigger cities, there needs to be more space in those other secondary cities. And so that's why we're seeing that. And obviously, if you have migration patterns and you have those apartment buildings, and single family homes are very popular. In fact, single family homes are probably the most popular right now. So there's a lot of private equity going into that, and there's not enough supply of single family homes. But I would expect to see, industrial's always been strong. So you're going to see other types of asset classes that are going to, pop up around that space as well.
What was the interest around like commercial, like shopping centers and things of that nature?
Yeah. Shopping centers. I've heard plenty of good strategies around retail. A lot of the bigger malls that have failed are starting to be turned into Amazon warehouses and last minute or last mile logistics for industrial. But I think there's really good strategies for retail out there. But I think the investor sentiment is still negative on it. Industrial is pretty hot and will stay so for a long time just because of online marketing and online retail. And so office space is sort of the big question mark still. And I've heard strategies on both sides. I've heard people that believe that companies are going to go back into the office. And I think that would be where I see things going, in my opinion. Because these leases are long term. You can get a 10-year lease. So I think people are going to go back into the office. Will it be to the degree or in the same way that they were prior to the pandemic? We don't exactly know yet. But that would be my opinion. You also hear people that think it's permanently changed and people are going to work from home forever, and I would tend to not agree with that sentiment.
So let's see. Looks like Samuel asked, you mentioned blockchain and real estate. Could you go a little bit deeper in what the investors were excited about regarding blockchain?
Yeah, blockchain particularly can be used as sort of a smart contract and perhaps a better way to streamline the purchase and sale of assets or the transfer of assets. There isn't really a solution for it that is mainstream right now. So, but I think it's wise that, the younger generations are getting interested in this and starting to ask questions about it. Every conference I go to, there's questions about it and people wondering what's going on there. So from what I've seen so far, there isn't really a mainstream or a highly accepted way of doing that yet. But it wouldn't surprise me if we see something in the next couple of years that would pop up for that.
A similar question, when you mentioned ESG, how is ESG actually applied to the real estate investment industry?
Yeah, I think part of the answer to that is it's being figured out still, but there's a couple ways that over the last 5 years I've seen this happening. One is especially with big commercial buildings, and that is optimizing the energy usage. So there's solutions out there that will manage that energy usage. So think the HVAC systems and stuff like that. And so that leads into it. There's LEED certifications and other things where you can argue how many of your buildings are LEED certified. So there's certifications out there, but it tends to be mostly on I believe it tends to mostly be on the commercial side. Although if you have a larger apartment complex, I suppose you could put meters and things like that on the complex too, and look for certifications there. Although I don't know if any of those exist yet.
Okay, got another one. You mentioned a lot of the younger investors are preferring to be educated. So the question is, have you seen this rise of investment platforms like, the ground floors and those types? How are those comparing or popularity, or are they a threat to traditional asset managers in the real estate space?
No, I don't think they're a threat. The space is huge. So if you look at the whole private equity market, the sentiment is that it's supposed to grow by something like 5 trillion over 5 years. It's growing from, what is it? Or maybe more than 17 to 21 trillion. If I just off the top of my head, if I can recall, I might be off on that number. And so the market's expanding massively, and we're having, newer and younger investors come into the market. That's helped driving that expansion. So there's plenty of room in the market for different types of strategies. And what you'll see is some of these strategies will use different approaches. Some will be funds. Some will be crowdfunded, like a 506c. Some will be individual investments that you just have a relationship with that manager and you trust them and you get in and take that approach. So I think there's plenty of room in the market for all these different kinds of strategies.
You personally, which one do you think is going to see the most growth as a method of onboarding?
I think if you can, so the majority of the market is still funds. Mm-hmm. And the majority of private equity investment is still institutional. Mm-hmm. It's just, I think, a factor that they have so much money. But if you remember, institutional money is coming from people's pensions, and so they're indirectly invested in these assets. But we saw 506c. There has been an increase in that crowdfunding type of model where you go into the mass market in the last couple of years. Although it's not major, but there has been an increase there. But again, the majority of the market, from what we can tell, is still funds and large private equity.
What was the most surprising discoveries that you guys found with this research that you weren't expecting?
Yeah. I think that's a good question. I think for me, I expected to see that the older investors preferring to do things as they've always done with paper. I'd have to say, probably the rate of change in the adoption of this kind of technology, and just the number of younger investors coming into the market. I don't know if I'd say surprising, but it's probably bigger than I thought it would be.
Okay. All right. So what else does AppFolio do besides investor portals?
Yeah. So AppFolio, just to give you a little bit of background, AppFolio as a company has been around for 15 years. publicly traded, so very stable, and we're a large company. We started off our 15 years ago building solutions for property managers. So we have a whole property management side of our company and a whole ecosystem of products and services around that. I am here representing our investment management arm today. And what we do is provide investment management, an investment management platform for real estate that really can be considered three different components. We've focused on the portal today, and the portal is a really important aspect to integrate, to interact with investors and potential investors. So we see that used for fundraising, investor relations, getting information out to your investors. But there's also the data behind that. And so we have a whole investor relations and fundraising platform that's part of that. And then the middle component would be active investments. So managing all the data around your partnerships, your funds, your JVs, your REITs, having all the investor data there, all the cap tables, all the transactional data, so that we can automatically calculate things like your distributions, so we can automatically calculate your performance, automate the reporting. So again, there's all this data on the back end that feeds this portal. It's all the data your investors are consuming. We're also making it really easy for you to get that data and track it and get it to them, so that your day-to-day operations are streamlined and you're spending more time doing what's going to add value to your company.
Awesome. You spoke about the user experience of the popular apps. Can you go a little deeper on that? I think that was a really powerful portion of the presentation.
The user experience of the mobile
the Robinhoods, yeah, the Charles
Oh,
Schwab,
yeah.
how people can apply that to their business.
Yeah. So I think, when you look at the media and you hear stories about Robinhood investors, these are primarily younger investors, and they're looking for ways to maximize their return and build their portfolio. And so, as you saw on the earlier slides with the different tools that they're using, E-Trade, Fidelity, Schwab, those showed up as the big ones, and that encompassed the older generations too, the 45 plus age group. I think the net result is that a lot of the younger generations are using the apps, and they're getting on there and they're trading, or they're looking at information. And again, they're looking at what they're invested in or the opportunities that you publish to them, and they can easily compare them to other opportunities to invest in. So stocks, bonds, blockchain, you name it. And I think we provide a great solution through this portal that is mobile friendly, that you can create new offerings and throw it out there. And we make it really easy to have a very professional look and feel and market those opportunities very quickly to a large audience of prospective investors there.
So what trends do you see emerging in 2022 that maybe weren't as present or as dominant in 2021?
Well, you're again, 2021, we've still sort of been in the shadow of COVID. So I would expect that as we start to pull out of this, and I'm talking to everyone from California today, and so California still you have to wear a mask in certain places you go, and I think what we're going to start to see, at least my best guess from what I can tell and reading the tea leaves, is that that's going to start to open up more. And I think you'll start to see people going back into the office next year, early next year. I think that'll drive office demand. We'll see some changes there. And I think the majority of the trends in place are going to continue. So you're still going to see a big demand for residential, and that's all kinds of residential. So that's apartments, at single family homes. Still see demand there. We still have a supply chain bottleneck, which everyone is seeming to say will go into next year, and I don't see any way it doesn't. But at some point, we would hope that we'll have that resolved, hopefully by mid next year. So that might reduce construction costs and other things. So you might see, I think we're already seeing construction projects resume. There's just not enough labor and not enough material to go around. So, but there's plenty of money. I mean, there's no problems on the capital side. There's no problems I'm hearing about raising capital or getting a loan. So I think these are easier questions that can be answered once we resolve supply chain problems. Hopefully that's useful.
So with all the money and less labor, what does that do to asset prices in the short term?
Well, you get a high demand and you got a low supply. So that means asset inflation.
So yeah, how will that affect the new investors? Will a lot of these opportunities be out of reach for some people?
No, I don't think so because, real estate, unlike stocks, get repriced by the second. And so, in the publicly traded markets, you'll see a lot of inflation. You are going to see asset inflation in real estate. There's no doubt about it. But real estate moves slower. It gets revalued less frequently. And so I think, going to be plenty of opportunity in the next year to get into real estate in one way or another, either through a crowdfunding platform if you're getting started, or through private equity investments or through REITs. There's lots of ways to get into the market.
Okay. Did you guys get any insights on how renters' expectations have changed?
Well, rents seem to be going up. Again, it's a supply and demand problem. So rents are continuing to increase. I think I just saw a report, I can't remember where the average in the United States is somewhere around $1,500 a month, which, the average of the whole United States is misleading because you can have places in Manhattan or LA
Right.
that are, or San Francisco that are incredibly expensive, and places that are very cheap. So, but that's what it reported as the average. So, but you're seeing those rents go up on average. And I think that trend's going to continue for a little while.
So, but are renters wanting more amenities since the prices are up, or is the power more in the hand of the landlords? Any insights on that?
Yeah, no, look, landlords want to attract and retain great tenants. And so, especially where you have migration patterns, you're going to want to see landlords that they're competing for the tenants, although the demand's high. Amenities, from what I can tell, and we didn't really survey about this in our data, but just anecdotally from what I can tell is that, the amenities are continuing to improve, and you'll see different amenities like maybe office space in apartment buildings.
What about the late collections? How is that going, or how have investors been handling that, or were there any comments on that?
We didn't survey that in this particular survey, but
Okay.
generally speaking, the late collections didn't materialize the way that the investment managers had worried about. I mean, they did in places, and certain buildings had challenges for sure, but overall in the market, it wasn't as bad as we thought it was. And so that's, the distressed assets for investment managers that we expected to materialize just haven't been there in a large amount. I think generally that's probably a good thing for the investment managers that own the assets and for those tenants. And, there's still plenty of opportunity out there.
Awesome. I don't think we have any more questions. Let me just take another look. Was there anything else you wanted to let the audience know?
No other information. I just would like to thank everyone for coming today and taking a look at our research, and hopefully it was valuable for you, and we'll talk to you soon.
Can you give everybody your contact information?
Yes. So we'll reach out to anybody that was on the webinar today. You can also reach us at appfolioinvestmentmanagement.com. That's AppFolio investmentmanagement.com. And we will get back to you as soon as we can.
All righty. Well, thank you, Michael, for joining us and giving us these great survey results. I'd like to thank everybody who showed up and everyone who asked a question. Thank you for making this a successful webcast. We will see everybody soon. And like I said, AppFolio will be reaching out to you to answer any questions you've had. And thank you for showing up.